I host a podcast with my good friend Louis Navalier. For those of you that are or have been around the industry for a while, know that Louis is one of the biggest stock pickers, one of the best stock pickers out there. And 2 years ago, we started this Rational Trader podcast that evolved into Two Sigma Trading from discussions and observations about some of Louis's highest rated stocks reverting to the mean. And so the scientist and researcher that I am decided to put that concept, and I could see anecdotally how a lot of his highest rated stocks were reverting back to the mean. But was there something that traders could take advantage of? And lo and behold, putting some rules on Louis's highest rated stocks, such as 2 standard deviations above and below the mean, also known as Bollinger Bands, which I'm very familiar with, by the way, and I'm sure a lot of you all are familiar with Bollinger Bands. But one of the shortcomings in Bollinger Bands is you've got a vast market of some 5,000 to 6,000 publicly traded stocks, and it's somewhat random as far as random being Bollinger Bands are random in that how do you know how to trade the right stocks? And so over time, Louis and I realized that there was an opportunity to trade his highest rated stocks when there's a trade 2 standard deviations below the mean. And before I dive into some of the stocks you all can take a look at, I just want to give you an example of a trade we made yesterday in Two Sigma Trading for a stock that reported earnings today, Tenet Healthcare. You can see prior to the earnings report coming out on Friday, there was a lot of weakness that had this stock dropping 2 standard deviations below the mean. We added it to the portfolio on Monday, and then today it doesn't always happen like this, but it's always fun when you're doing a presentation like this, David, to
Jamie,
have a stock in real time move. I'm sorry.
Sorry to interrupt you, but can you maximize that window? Because we're only seeing, part of the
I'm sorry.
part of the screen there.
Yeah, is that this is about as large as I can go.
Oh, okay. Yeah, that's fine then. Okay.
I apologize. I am a newbie. I can get better at this, I promise.
Okay, sounds good.
Just remember, I'm an old-time stock guy. This whole trading thing is all very new to me. No, I'm kidding about that, by the way. So this is just a good example of a stock. This is a top fractile Navalier stock. It was on our radar to watch. It traded 2 standard deviations below the mean, as I said, and now is reverting back to the mean. And ideally, it goes to 2 standard deviations above the mean for a real robust trade. Since inception, we started this service, David, back in March. We've made about 100 round trip trades. 75% of them are winners. This is Two Sigma Trader, as is the name of the service. And the average holding period, we're not day traders. This is a 21-day holding period for those of you that are interested in following us. Another stock that we added to the portfolio last week is Comfort Systems. This is one of Louis's favorite stocks. It's, again, a top fractile, highly rated stock under his system. They reported earnings last week. Lots of action, by the way, around earnings. That goes without saying. There's always volatility. This one traded 2 standard deviations below the mean. We're agnostic as to the reasons and causes for why that might happen. And maybe I should back up just a second. There's a reason why when I say Bollinger Bands are kind of amorphous, it's this large giant market of stocks. And sure, a rando stock can trade 2 standard deviations below the mean. But how do I know to trade it? When you layer on top of it this great stock picking system of Louis Navalier's, where his highest fractile stocks, these are stocks utilizing fundamental factors like earnings growth, revenue growth, margin expansion, analyst revisions upward, just to name a few. And it kind of makes sense if you just take a step back and think about it, that whatever the reason, if a really highly rated stock is trading lower and drops 2 standard deviations below the mean, what that says to me is that the probabilities are in my favor for finding a winning trade. And that makes sense too, because Bollinger Bands, by definition, is 2 standard deviations above a mean, 2 standard deviations below the mean, simply implies that 95% of the time, a stock is going to trade in between those bands without getting too deep into the mathematics of standard deviation and the mean price. And so outside of earnings season, Louis always says, hedge funds tend to manipulate stocks. And so there can be a ton of reasons why a great stock is trading lower. We don't care about the specific reason. What we care about is that it's a highly rated top fractile stock. And Comfort Systems, we were able to get into that trade on Friday, the 25th. And it's already moving back above 2 standard deviations below the mean. The next stop is 2 standard deviations above the mean. Another stock to watch this week is D.R. Horton. They're in the news today with an earnings report that really disappointed. And you can see here that as a result, shares dropped 2 standard deviations below the mean. And so then the next question you have to ask yourself is, D.R. Horton a highly rated stock? So do the analysis, go back and look at the spreadsheet of 5,500 stocks, and lo and behold, D.R. Horton is in the top fractile. This is a stock that's definitely on my watch list. I will be adding this stock to the model portfolio of Two Sigma Trader before the day is over. Now, why is it important to buy stocks that are highly rated? Well, here's an example of a stock that isn't highly rated, that is crashing today after its earnings report, Crocs. And you can see Crocs, I think that's October 23rd, dropped 2 standard deviations below the mean here. Just ever so briefly, it traded below 2 standard deviations below the mean. And here's an example of what I was saying earlier is, okay, I'm just following Bollinger Bands. Do I want to trade Crocs? Well, I wouldn't. Why wouldn't I? Well, it's a mid-fractile stock. It's neither high nor low. And I guess that's irrelevant, because if it's not highly rated, then I'm not going to trade it. And so this would have been a false signal for someone to get involved in Crocs just because it traded 2 standard deviations below the mean. And 4 trading days later, after a crummy earnings report, the stock is down 17%. So again, the idea that Bollinger Bands, to me, this is what I love about 2 standard deviations, is that it doesn't guarantee that a trade is going to work out. It just simply means that the odds are going to be in my favor, that a trade is going to go my way. And as I said, since we started this service, after, again, exhaustive research on the ins and outs of why we are doing what we're doing at Two Sigma Trader, we've had some 100 trades that we've made round trip, open and closed, with 75% of them being winners. The average gain on a trade is just under 5%, which is pretty dang good, because if you annualize that, that's over 80%. And like I said, the average holding period is 21%. Now, for those of you listening, if you want to learn more about Two Sigma Trader, we do have a foundational member offer for folks. If I can just drop that ticker symbol for folks to sign up, it's www.tradethirsty.com. TradeThirsty is my publisher, and /Sigma. So www.tradethirsty.com/Sigma. Okay, I've showed you some of the trades that have worked and some of the trades that we're going to be making. Here's another one, McDonald's, that reported earnings today. the stock's only up fractionally, but here's another example of we don't care about the reasons why a stock drops. Last week, of course, the E. coli story hit. Big news, blah, 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 blah. I don't care. I mean, I feel horrible that people get sick from, I guess the sliced onions that were in quarter pounders. And it's tragic that somebody passed away, but it did create a trading opportunity. And I know that sounds callous, but it is what it is. The stock traded 2 standard deviations below the mean. It is a top fractile stock. It was on my watch list, but never in the last 30 days did I think I'd get a chance to trade it because it's trading 2 standard deviations above the mean. Well, the news hit. It traded below 2 standard deviations. And now, even with a middling earnings report that was somewhat mixed, global sales weren't as strong as expected, but that's, I guess, to be understood given the weakness in the overall global economy. And McDonald's, I think, is going to be another winning 2 sigma trade for us. All right. After the bell today, and here's similar to McDonald's, a stock I'm watching, but I don't think I'll get to trade. It is a top fractile stock. Chipotle Mexican Grill is out with their earnings report. After earnings, people that love this stock may want to get into it for any number of technical reasons. I'm not looking at all those other technical reasons. I'm just looking at 2 standard deviations. And right now, this highly rated stock, this top fractile stock, Chipotle, is trading 2 standard deviations above the mean. I'm not going to trade it in advance of earnings, which oftentimes can be a great trigger to move a trade back to its mean or even higher. It is on my watch list. I will keep an eye on Chipotle, and perhaps similar to D.R. Horton, that you can see here, D.R. Horton, by the way, was on my watch list, and it was just barely above 2 standard deviations. And so the fact that it's now below 2 standard deviations is my trigger. Will the same thing happen with Chipotle after its earnings report? Maybe. That's why it's on my watch list. All right. Here's another really great stock that folks can get involved with immediately. We actually entered this stock last week. Again, we're not day traders at 2 Sigma Trader. So this one is a stock we're in the red to start this trade, but I'm not really concerned about it. Erie Indemnity is an insurance company, and after an insurance company like Travelers, for example, hit the cover off of the ball with its earnings report, Erie Indemnity was a stock that was on my radar, and then a couple weeks ago, I believe it was, a short seller, relatively I had never heard of these guys for good reason. I think they're a short seller with just over $200 million under management, which is tiny. They're not a shop that's going to move the market. Erie Indemnity, by the way, is a multi-billion-dollar market cap stock. So it was really interesting to see a short selling report bash this company. This short selling firm took a position on the short side, and they had their argument. They made their argument. It's published the reasons why they're going short. But if you look closely at their report, you can see that there is nothing new that the market already doesn't know about Erie's business model that they shouldn't already know. In other words, it's not like they're discovering some accounting flaw or I don't even know these days with the transparency of U.S. publicly traded stocks. It's really hard to find a reason why a company might be misleading investors, I guess is the best way to say it. So whatever the case may be, I absolutely love this stock now. It traded 2 standard deviations below the mean October 16th, and we opened a trade here last week with the stock trading 2 standard deviations below the mean. So there was a few days of trading. Again, we're not trying to be market timers here by any stretch. If it just meets our parameters, A being a highly rated top fractile stock, and it trades 2 standard deviations below the mean. And remember why we do this. Again, I'm going to say it again, that what you can take away from 2 standard deviations above and below the mean is that what that's saying to you statistically is that 95% of the time, a stock is going to be trading in between those levels. That's powerful stuff. And if you add in what we think is our secret sauce of only trading the highest rated, great fundamental companies like an Erie Indemnity, you're putting the odds in your favor for a winning trade. And over time, you just keep doing this over and over and over and over. I feel very confident in, again, we've only made 100 trades round trip. That's not nearly statistically significant from a pure trading back testing standpoint, but I've been around and in this business for over 30 years, and I feel quite confident that we're going to be able to duplicate those numbers. By the way, we've been running those numbers in a period of up markets, down markets, sideways markets, you name it, it doesn't matter. The numbers are the numbers, all because of trading highly rated stocks that trade 2 standard deviations below the mean. What's interesting about Erie, for those of you that want to get involved in trading like this, it's not too late. It is trading above 2 standard deviations below the mean today. I'm okay with that from time to time. I call these rule busters. I like this stock so much, and the fact that it's gone down and the Bollinger Bands have widened here, giving us just this really rich, robust range that we can trade in. I'm okay opening a trade just above 2 standard deviations above the mean on this one, mainly because the company reports earnings results on Friday, November 1st. So with other insurance companies demonstrating the pricing power in premiums and lower claims than expected, or taken off balance sheet by reinsurance companies, I'm really expecting Erie Indemnity to deliver a great report. And all of this selling that's been happening because of this short report, hey, the short seller, for all I know, they've gotten what they need to get out of this. They could be covering this stock. I think they're well aware that earnings are going to be strong. So my expectation on this one is that they're going to be covering, and look for Erie Indemnity to trade back above not only its mean, but back perhaps to 2 standard deviations above the mean. That would be somewhere around 570. We're at 450 today. That's 120 points above current pricing. Just rough calculation, that's 25% or more on this stock that I think is on the bone for traders to eat. Another stock to take a look at during this earnings season, again, following our criteria of being a top fractile, highly rated stock, is a shipping company called Navios Maritime Partners. That ticker symbol is NMM. And NMM, for whatever reason, the stock, well, I can tell you the reason, it's turmoil in the Middle East, has been drifting lower and lower and lower. It didn't trade below 2 standard deviations below the mean, but it's close, and it's still close today. Close enough where I would be comfortable making this a rule buster trade. I should add, by the way, just taking a quick time out, one more time, just if folks are interested in following us and getting involved in trading this way with great top fractile stocks that really aren't available anywhere else other than Two Sigma Trader, visit www.tradethirsty.com/Sigma. We're running a foundation members special. You can, the retail on this, I believe, is just under $5,000 per annum. Again, because of that exclusivity of the stocks, finding those right stocks to trade using 2 standard deviations is where the rich value comes from on this. but my publisher's doing opening the doors for the first 30 members to get involved here. Let's see, I think the price is $7.99. So a huge discount to get involved in Two Sigma trading. Some of the stocks, like I said earlier, we've already made some really nice returns. Folks that have joined us in the last week have already made that $700 back and then some, just in the short time that they've been members. Navios Maritime is another stock. Louis Navalier calls these stocks buy the dip, reversion to the mean. Again, I'm strictly a rule follower here. I would be waiting for a dip below 55 to get involved with Navios in advance of its earnings report. And I apologize, I don't know exactly when that's going to be, but it'll be within the next 4 weeks that this company reports earnings. So it's not too late to get involved in a stock that is 95% of the time trading in this nice $10 range between $55 and $65 a share. To me, it's just going back to the rational trader, David. The behavioralist in me, this Two Sigma trader just speaks to me in volumes because it just makes so much sense. And this is a top fractile stock. It's a stock I know is on Navalier's radar to be added to his money management client portfolios. And so I'm looking at it very closely as well. David, I'm not sure if there are folks putting in ticker symbols. If you want me to do an analysis in real time, I can certainly do that. But otherwise, that's all I have for
there's
today.
a couple. Can you see the chat?
Oh, let me
you just
see
have
if I
to
stop
find
sharing here. There we go.
um,
Okay, thank you.
yeah,
Sam is asking for MATX. Well, the first thing I'm going to do, Sam, is ask the question, where does MATX stand in the fractile pantheon of being a highly rated stock? And I can do that real quickly here for you. MATX. I'm not familiar with that company. Matson's is the name. It is in the top fractile. So this would be a stock if it meets my criteria, and I can look at the 2 standard deviations right now. And I typed in the wrong ticker, so I apologize. Hold on. MATX. Let me share my screen real quick, and you can see what I've done here. So there's MATX. This is really interesting. Again, I'm not familiar with it. It's not on my watch list, but maybe it should be. It's a highly rated top fractile stock trading pretty close to 2 standard deviations below the mean, Sam. So I would look a little more closely at this to see. I'd want to do a little bit more research before adding it, but the 2 most important things that I'm looking at are, is it a highly rated stock? It is. And is it trading 2 standard deviations below the mean? It is not, but it's close. So this is one that I would want to watch pretty closely. Next up is FN from, it looks like Dave. Dave, let me do the same analysis here. Start with, is Dave a highly rated stock? I believe it is, because I'm familiar with this one. Yes, it is very highly rated in the top fractile of stocks using the factors that Louis Navalier analyzes. And by the way, his system analyzes the market every week. So this is these names that are at the top fractile are always changing. If you become a member of Two Sigma Trader, I update my watch list every 2 weeks. So that's kind of the rotation that I found to refresh my watch list. I don't catch everything, obviously, on Matson. Excuse me, Matson's didn't hit my list, but I try to keep anywhere between 15 and 20 open trades in the model portfolio. I really don't have the ability to trade everything, and nor should you. I do use some subjectivity sometimes too. So Dave, and I'll share my screen again. I just put it up. That is a highly rated stock. Now, it traded 2 standard deviations above the mean here back in the middle of the month, but it has been drifting lower. Again, this is a stock that should be on my watch list if it isn't. I don't recall. It may be already on my watch list. I have about 30 names on my watch list, so I don't know them all off the top of my head, but I wouldn't necessarily trade it, but keep an eye on this, because if it drops below 38 here, this is going to be a really interesting name to add to a 2 Sigma trader portfolio. Next up, looks like, let's see here. FN. All right, FN. And starting with the rating on the stock. So no, I'm not even going to go further on this one because it is not a highly rated stock. So I don't even want to be enticed. Murphy is asking about DJT. At one point, now Murphy, are you asking about let's see, Trump media, I'm guessing is what you're asking about, but I don't know for sure. All right. And I think that ticker is DJT. And I can't find it for some reason. So I apologize. And I'm looking at my time running out. So what I can say about DJT, it's super, super volatile. Right now, it's going to be trading way above 2 standard deviations because the last 2 days it's up some 40%. So it is not a stock that I would trade. And then the last one is Tile here, and I'll look up Tile interface. That is a highly rated stock, and I can look at. All right. I can look at that chart and Tile. I'll share my screen again. Tile is trading close to 2 standard deviations below the mean. So this is definitely a stock to watch. It is highly rated. It is a top fractile stock. And trading below 1750 or 1740, it looks like this could be a really interesting 2 Sigma trade. If I can wrap it up, folks, I would love for you to check me all out. We're running a special, as I said, at www.tradethirsty.com/Sigma. Hope to see you all joining me. David, I really appreciate the time. Thank you very much. And take care, everybody. I hope you all have a great rest of your day.